Let's get the Friday trade. Brent Wilsley is president of Wilsley Asset Management, and Yu-Dee Chang is principal and chief trader with Ace Investment Strategies. Yu-Dee, I see overnight Goldman has come out with a note suggesting people should still dip into oil equities at the moment, despite the falls that we have, because they believe that the oil release only backs up the view that there will be tight oil supplies moving forward. You also like oil.
Absolutely so. I know, Simon, you think about it, this is a new class of people being created in China, in India, in Brazil. That's called the middle income level people. 20 years ago, people in China were on bicycles. Now they're buying actually 2 cars. So I think the energy, the demand for energy is going to be there on a longer term basis. But we're human beings, right? So on the shorter term basis, we tend to overeat, oversleep, and we overbought the oil market. The price of oil moved from about $74 a barrel up to about $115. It backed off a little bit. Sure. So I think it's time to...
Why ConocoPhillips and Exxon in particular?
Well, these 2 companies, if you look at ConocoPhillips, especially at this price level, they actually have a very good dividend yield. They're actually full of cash, and their earnings growth has been there. So I like the oil majors to take advantage of the oil market in this case.
Brent, Google spent most of 2009 under $500 a share before re-rallying to $618. It is again under 500. You think that is a buy on Google? Why?
I think under $500, Google is a great buy. We started buying above 500, and I still feel good with that. But I mean, gosh, look at the numbers on Google. I mean, you got a forward PE of 12.1. A PEG ratio of 0.82, so you're not paying very much for the future growth of this company. And keep in mind, Google has $1 billion a month in cash flow, $37 billion of cash and short-term investments on their balance sheet, and their debt to equity is 6.6%, 1/10 of the industry. Their sales are up 25% year over year. Google's not a company that's going to stay down very long.
But Brent, okay, 2 points to that. Number one, it was a $700 stock back in 2007. It keeps making lower highs technically, and now you've got the U.S. government saying, hey, Google, we're going to sniff around you and see if there's any antitrust issues.
Right, and it's always fine when they do that because you can't beat a strong company down. And I like when I see things like this happen because what it does, it brings that stock price down temporarily, and then all of a sudden, 3 to 6 months down the road, wow, you're up 20, 25% on the company because they're not going to find anything there. And if they do find something little, it's not going to hurt the earnings by that much, and you're not paying much for those earnings right now. It's almost a value play, and we're talking a company with, again, great growth rates.
Okay, looking at that picture reminds me it is Friday. Thank you very much for that, Brent. And Yu-Dee, good to see you as well. Thank you.